Happy Tuesday, everybody. We're going to jump in without the usual 2 or 3 minute buffer here because we have a pretty packed agenda, but hope you're having a good week. As always, the agenda is in the stage chat. If you want to follow along, we have some guests today joining us. We have plenty to talk about. So yeah, just to jump right in. Pardon me. I wanted to start this with a few general thoughts, and my apologies if my audio setup is a little different today. I'm not on my usual mic, but so we're obviously in a very challenging macro environment. We kind of had this risk-off kind of inflationary sort of environment with the Fed, raising interest rates, although they're still adding stimulus to the economy, but there's this perception that it's bad for risk assets like crypto, and then you throw a war in there. So you see this with equities. It's been encouraging at times to see crypto actually outperform equities. One rousing validation of crypto would be if crypto started outperforming on a regular basis the global stock markets. That would be pretty impressive, and maybe we'll come out of this in kind of with that being the case. Of course, what does this all mean for ShapeShift and for Fox? The token itself has dropped to what is if you're a TA guy, you might say this is pretty important support at 25. It's been down this level before, and so far it's holding. But of course, we have to plan for the worst case scenario of that dropping. We need to plan for a bear market where we drop substantially and stay there for a while. This is crypto. So this is why we've been for several months really working towards this goal of raising stable coins. I'm happy to report that we're about 30% of the way there. So even after including payroll that will be going out soon, or this week, payroll for February, we're at roughly $3 million. This is mostly a result of the USDC Olympus bond we've had going. Another big help was the Success token sale, which was over $500,000. Of course, we have our validator. These are all really nice revenue streams. Especially, one thing is you don't want to say necessarily that just selling some Fox or using the Olympus bond is a revenue stream. You could probably argue that both ways. I think there's a case to be made for it being a revenue stream. But the bottom line is we're getting more stables. Willie was also able to identify a really good ARB opportunity related to our Angel Vault. We were able to execute on this twice already for more than 6 figs worth of USDC. So basically, we're able to sell that much Fox without hitting the market and impacting price. The TMDC pre-authorized doing this really whenever there's an opportunity to do so. So thanks, Willie, for identifying that. Being able to find these little ARB opportunities and other things in DeFi is one of the values of having a really engaged tokenomics committee. And if anybody else out there, is ever analyzing our DeFi positions and sees an opportunity to jump into something, please don't hesitate to raise that with the work stream. One other unrelated thing to tokenomics, well, I'd say it's tangentially related because it relates to getting the word out. But I just wanted to throw in my 2 cents. You guys may have seen that there was a proposal for Lindsay to work under the growth and globalization team. I believe this is under a sub-proposal that Hunt had. Anyway, I just wanted to sort of mention that Lindsay is a former Fox, centralized Fox. I had the pleasure of working alongside her. I have been in tech for a long time, since like 2012, and I have never come across somebody better at tech PR than Lindsay. She is a freaking rock star, and she'd be an amazing asset to this community in terms of getting the word out about what we're doing, in terms of positioning the DAO as a thought leader in this space, which has a huge impact in terms of one of the challenges I think we have, which is recruiting more talent into the DAO. So take a look at that. I believe it's in ideation right now. It's somewhere in the forum. But Lindsay's amazing. She definitely has my vote, and I think she'd be a huge asset to the community. Okay, moving along. You guys may remember that we had talked about Hedgie, which is kind of a new tool, a brand new tool actually, that just went into production last week, that enables kind of like crowd sale OTC sales for DAOs it's like a decentralized fashion. This would actually address kind of the main pain point of like, we want to raise more stables currently. Down the road, maybe we want to raise other assets like ETH or whatever. But just selling this on Uniswap or something could tank the price. This is a tool that we can kind of emulate an OTC type sale, but we're selling to a variety of counterparties using smart contracts. It's decentralized with a bunch of parameters that we can tweak, which is very cool. Customizable parameters in terms of like the time lock that this would entail, how much we'd want to sell. Just having these tools at our hands could be very helpful. One challenge with Hedgie is it's a brand new project. My own personal inclination is to usually hold off on these things until they have a Lindy effect. Hedgie had undergone an audit. Since we're thinking about experimenting with this and starting to use it, we also wanted to have somebody internally here at the DAO audit. Ocean was cool enough to do that in a very with a very quick turnaround and some great insights. He found some elements that he believes need to be addressed prior to putting money in to the project. But the good thing is the Hedgie team seems very engaged and earnest and eager to address these. So I mentioned this just to update you guys in terms of that if you were interested, but also I think it's just a really good, it's very validating in terms of just like the idea of being very methodical. In DeFi, we tend to, kind of get FOMO and want to just ape into the latest shit, consequences be damned, or think, oh, it'll probably work out, or it's only 6 figs or something. 6 figs is a lot, and we should always remember, regardless of the market environment, even in the most, crazy FOMO bull markets, whenever it comes back, we always need to be very methodical and careful with this. And I think it'll be a win-win. I'm surprised, I'm excited to see the protocol tweaked in response to this audit, and looking forward to moving along on that. Let's check the stage chat. Oh, thanks, Ron. I am feeling better. I feel like my voice is still slightly nasal, but yeah, that was kind of a hell of a doozy of a East Denver confluenza. It was never COVID though. Yeah, shift trolling. Gold is basically at an all-time high. I like gold a lot personally. Not as cool as crypto, but it's good to have. Okay. Willie, if you wouldn't mind jumping on stage to chat about success tokens. So you guys might remember that we had a really cool, well-timed sale of success token. This included Coinbase Ventures, who invested $500,000 into the DAO, which is really great for credibility, and getting them involved is a good thing. We had some other investors as well. We still have unminted success tokens that have the same parameters. And the interesting question that Willie has for us is, what do we do with these minted but unsold tokens?
Thanks, Kent. GM, everybody. So yeah, we basically, there's kind of two obvious options that I see, and I'm open to other ideas as well. But the first obvious option is just to continue holding these success tokens in the Treasury and continue pitching to strategic investors. But the challenge for this, of course, is just the amount of time it takes. And, fundraising can really be a full-time job. And it's certainly not what I'm focused on full-time because there's just so much going on. And I don't think any of us really have bandwidth right now to focus on that full-time or to really give it the attention it deserves. But that is one option. The other option I see is taking the remaining success tokens and adding them to a pool on Uniswap v3, just one-sided. And we could do this at a price range. So we sold these success tokens to strategic investors at about 35.5 cents. We could add them all at that same tick, or I kind of like the idea of adding them at a short range, like 35.5 cents to 42 cents. So there's a bit of a incentive to buy these tokens early. And then they're available to anybody, right? And we can still continue pitching them to strategic investors. It actually kind of makes the transaction a little bit easier in some ways, because with this first batch of investors, we just asked all the investors to transfer USDC to the Treasury and trust that we would then transfer them the success tokens. The cool thing here is that it's trustless, right? They can just go buy the success tokens directly on Uniswap V3. So I kind of like this idea. And then we could also, mention it in the announcement if we want to. Or, if we decide that we don't want to include it in the announcement, we don't have to. But we're about to announce the success token investment and the fact that Coinbase Ventures and Chapter 1 bought some of these success tokens. We're working with Uma and Lindsay to make a big splash with that announcement. So we could also just include in that announcement, hey, by the way, these success tokens that you just learned about, they're actually available on Uniswap V3. And we can, of course, still keep continuing to pitch to strategic investors and pointing them to that Uniswap V3 pool. But the big difference here is that it opens it up to everybody.
Which is very much in the spirit of just permissionless finance, and it's a nice way to utilize those. The only downside I saw to selling it on Uniswap is the idea that, okay, well, what if we sold those for lower price than our strategic partners paid for it? Then it's kind of like, it's not a great look. But what you're proposing, and I think it makes a lot of sense, especially given the strike price and the parameters on this, is that we just set a very similar price, 35 cents or somewhat higher, kind of that range for the tokens. That eliminates that problem. And to clarify, Willie, by having that 7-cent range, the idea is to create the opportunity for maybe a little bit of price discovery, potentially, like there might be enough demand where we could get somewhat more for the token.
Exactly. So when you add it to on Uniswap V3, you can add it to any range you want to, including just one specific tick. I totally agree. I don't think we should make them available for less than we sold them to strategic investors for. But I like the idea of adding them on a short range. And really, the main reason I like that is not only that it would bring ultimately more stable coins into the Treasury if we sell them all, but also that it just really encourages people to get in early, basically. It creates a little bit of that FOMO. But there is one consideration here, of course, is that if we do add these success tokens to Uniswap V3 pool, and then people buy the success tokens, it does create exit liquidity for these investors that we did sell success tokens to. So theoretically, those investors could go to Uniswap V3 and sell their success tokens for USDC. But I don't think that's likely, and the DAO will be able to withdraw its liquidity and its USDC from that position whenever it wants.
Yeah, I would say the majority of our counterparties or our buy-side volume on this deal probably is not likely to do that. Maybe a small portion, but that is a consideration. And to clarify, Willie, we're talking about how much USDC total that could be sold?
So in total, it'd be $1.375 million if we sold it at the same price we sold to strategic investors. But it'd be a little bit more if we decided to put it on a range.
Okay. And that would be huge in terms of our getting more stable allocation. Alternatively, just finding more strategic investors. The one thing that strikes me as a little bit challenging here is it's a little bit time sensitive, or I should say price sensitive, in the sense that in addition to being a longer term option, that's not so much the factor, but just the fluctuating price could impact whether or not these things are desirable. John, I see you on stage. You probably have some thoughts as well.
If you're talking, you're still muted.
Hey, sorry. Hopefully you can hear me now.
Yep.
Yeah, I think this is an interesting option. I just wanted to, bring up, should we consider maybe, rather than putting all of them up in the pool, maybe like a tranche of them to start and see how it goes, and then we can always put up more? Like maybe we just put up a tranche of them in the range Willie's talking about of like $500,000 worth of success tokens, and just see if there's any demand there. Because we could always do something else with the other ones. We don't necessarily have to put all of them up in the one pool, but not that I'm totally against it, but just a thought.
Yeah, that's a good thought. We certainly don't have to put them all up at once. And to Kent's point too, the price of Fox definitely impacts the attractiveness of these success tokens. And if the price of Fox appreciates and we still have some success tokens, we could potentially sell them for even more than that initial range we were discussing. So I do like that idea of starting with like 500,000 of these success tokens, seeing what happens, and then deciding what we do with the rest later.
Yeah, not a bad idea. Is there a bit of a marketing aspect to this too, in terms of getting the word out and making sure that the right potential investors are even aware of this opportunity on Uniswap?
This is a great question too. How do we market it? So I do like the idea of including it at the end of the announcement, just for all these people who have read this announcement about success tokens and stuff. I think it's a great call to action to say, hey, come, if you're interested, come check them out yourself. But it does bring up the question around how do we market these? And I'm not, and I think my main reservation of doing this is that are we allowed to market something like this? And I'm not familiar enough with any of the even regulations that could be considered relevant to make a call on that. But I'd like to think that as a DAO we can decide to put these tokens up on Uniswap v3, and there's nothing wrong with that. But when it comes to marketing it, I just don't know whether or not that opens us up to any risk.
Yeah, there's always some degree of risk. It's just a matter of which ones make sense. I would recommend maybe not, like if it is part of the announcement, making it a very small part or just like an offshoot. But perhaps we just do it as a separate announcement too. I'm not sure.
Sure can.
Thank you.
Yeah.
Can you hear me?
Welcome.
Okay. So, yeah, I think Brian could also join me at one point, but I can just briefly introduce. And like you said, I'm coming here from a conversation Meet Denver that I had with Eric, and I was just coming here because I would do business development for Bancor, and I was wanted to let you know about Bancor as a solution for Treasury staking. So to introduce Bancor, we're the first X. We've been around since 2017. And Fox was actually whitelisted back in September 2021. Willie wrote the proposal, I think. So the point there then was to have Bancor be a place to stake Fox and protected with stakes protected against impermanent loss. Because we have two main distinguishable features, and they're impermanent loss protection and single-sided staking that we offer for all liquidity providers. So this would mean that for treasuries, this is a very risk-averse option of providing liquidity. They can provide a treasury can provide, in this case, Fox could be provided single-sided, and also getting permanent loss protection on top of it. I discussed with Eric the fact that you're using Itchy, so you're using a Fox Angel Vault, and we've had some conversations with the Itchy team that a solution using the Angel Vaults on the one Fox USDC pool on Uniswap V3, alongside having Fox liquidity on Bancor, would mean that the Fox Treasury could support great amounts of liquidity for Fox. That would, of course, allow more natural price discovery, and it's always good to have enough liquidity for swaps to happen, and none of this would accrue in any permanent loss. Before I'd like to have Brian just chat in and explain a bit more, but I did want to talk about a dual liquidity mining program that we also have. Since we already have a pool for Fox, the process is quite easy. So any tokens that projects commit to on Bancor until the end of April, we will match the contribution in dollar value up to 50,000 BNT. So that's around $100,000. And this is a liquidity mining program that you could benefit from if you choose to opt in until the end of April. Currently, there's around $200,000 worth of space for Fox to be staked single-sided on Bancor. But I can work on a proposal to increase the space for the treasury if needed.
Yeah, this sounds interesting.
Yeah.
Yeah, I guess before we dig in further, Brian, yeah, if you want to provide some perspective as well.
Yeah, Itchy has been a long time Bancor partner. I believe we've passed 3-4 votes total in their community. And one thing I would like to just mention is Bancor has been one of the most innovative projects in AMMs for a long time. I remember their first double coincidence of once white paper in 2016, long before we thought of Uniswap and others. And at that time, I played with this spreadsheet trying to figure out how to use Bancor for startup ideas. And I put the math in the Google sheet. I kept losing money. And at the time, I didn't know it would be called a permanent loss later. That was why I was losing money. It seems almost normal for projects to assume it's okay to put your tokens in, lose them if your project does well. Like you put your tokens in Uniswap V2, you put them in SushiSwap, other exchanges that didn't discover that impermanent feature pain point and we're resolving it. And if you succeed, you end up with fewer of the project tokens. So you're basically betting against the project to put money in those pools or any of the liquidity strategies that deploy to them. So I think that it's very wise to support a Bancor pool. Itchy is now the 11th largest Bancor pool in existence. I wish more projects in the space understood the importance and the deal with having all of your assets matched 50%. You get whitelisted, you put $100 in there, they're going to put $100 of BNT in there. You get that part for free. Other projects brag about doing that, force you to buy their token to route it your way. You just get it as a benefit. So the whitelisting process is a bit of a pain, upping the amount that you can put in, etc. But it's like a no-brainer, in my opinion, to protect the deposit that you put on an exchange. Now, with the Angel Vault, there's also this interesting dynamic where you put the assets you have that will be used to fund your.
Hey, Brian, sorry to interrupt. You're a little
token
faint there. Would you mind leaning into the mic? You sound a little bit distant and hard to understand.
Oh, that's right. I think my headset must be breaking. Is that better?
Way better. Thank you.
Yeah, I'm just standing closer to the laptop. It must have picked up there. So you put the dollars in the Angel Vault, you put the Fox tokens in Bancor. It's kind of the same as adding to another pool, only you don't have to take the risk of ETH or something. And in both cases, your deposit is largely protected, and in the case of these other exchanges, I've had Ichi 10x while having liquidity in Uniswap V2, and it's so painful. Like you just don't want to succeed and then end up with less value.
Yeah, this is a great example of how the money Legos all work together. What TFNS is proposing on its own sounds like kind of a compelling way to add more liquidity or Fox liquidity in another area, but in the context of what you're talking about, makes it more interesting. This strikes me, guys, is a great use for or a great application for community governance. Kind of my initial take on this, and certainly want to leave it leave room for insights from the rest of the community too. But my initial recommendation would be maybe craft a proposal for the community to vote on related to this. I think you maybe mentioned 200K worth, but kind of really laying out the specific kind of benefits here for the DAO, how this would benefit the DAO. Maybe tying in the Ichi angle as well. But sometimes we will kind of tackle these things under the TMDC itself, but something like this with external third parties, I think it's very valuable for somebody to come in and just present this in the proposal context. It presents a nice win-win because our community gets more familiar with what you guys are doing through that. And of course, anything that improves the governance or increases participation in governance is a win as well for decentralization. TFNS, do you feel like you? I guess you might want to test the waters more before crafting something super specific. But really, in case you're not familiar, like our governance process starts with just like kind of a casual testing the waters post on the forum. It doesn't have to be, it's certainly not binding. It's just kind of like laying it out. Would you feel comfortable crafting something like that in the near future?
Yes, of course. And I have to agree with you. I think these DAO to DAO interactions are what the space is all about. In fact, I was part of the Bancor DAO for one year before I joined the core team. So I'm happy to draft a proposal, and I'd really appreciate any feedback, and we can go back and forth and discuss something that also works for all the community and something that people want to see.
Yeah, that'd be great.
Yeah, I'll go through your governance forum, and I'll write a quick proposal in the next couple of days.
Perfect. Yeah, looking forward to that. John, did you have some thoughts as well?
Yeah, I guess I just had a clarification question. I just listened to the last few minutes of this, but I'm a little unclear on what the proposal or suggestion actually is. Is there a kind of a short pitch version of like what we'd be asking the DAO to do? Is it just to place some Fox into Bancor, or I'm a little confused?
So to clarify, the proposal would be to stake Fox on Bancor and listing the advantages of doing so. So at the same time, I'll also try to entertain other options, because with Bancor 3, which is going to be our biggest protocol upgrade yet, we're bringing interesting features that you might want to consider, like the dual liquidity mining program that we're starting now. And also we will have LP tokens that represent a single-sided stake with no impermanent loss downside, which means that they're really good collateral, because they're well, I don't want to call it that, but they're up-only tokens, really. Because they always represent an increasing share of the liquidity, fees, and rewards in the Fox pool. So a BN Fox would be the LP token, would always grow up in size with regards to Fox. So it could be interesting for stuff like governance, for example.
So just to be clear, the main rewards is just obviously the impermanent loss protection is great, but the rewards are mainly whatever volume comes to the pool, like a share of that volume. There's not like some other staking reward or something that we're missing.
So you get the fees from the swaps. The rewards themselves are liquidity mining that we do on the BNT side, matching any Fox tokens that you commit for liquidity mining. So this is alongside the Treasury stake if you wish to incentivize the pool and make it a more attractive place for liquidity providers to stake Fox, then we can also explore that.
Gotcha. Thanks.
Yeah, you're welcome. It's quite open-ended, so. Oh, sorry.
Just there was a great idea that came out of the stage chat. Have you guys talked to Tokamak at all about partnership there?
Yeah, we've had some discussions. They're still in early stages, but we're definitely discussing. It's a good
Cool.
idea.
I think that'd be awesome, and I would love to see Bancor as an option to deploy liquidity from any of the Tokamak vaults too.
Yeah, we are.
Yeah, great point.
Without saying too much, but yeah, it will definitely be something you'll see in the future, I think.
Sweet, you guys are already thinking about it. Excited to see how that goes.
Thank you. Oh, by the way, Steven said hi. Willie.
What's up, Steven?
He couldn't be here, but he said that he just wanted to say hi to you. And what's up?
That's awesome. Tell him I said GM.
Yeah, I will. Thank you.
Hey, Marley, did you? Oh, okay. Wasn't sure Marley had a question.
Yeah, sorry. I was just trying to clarify what I was trying to type. I'm walking the dog, so it's hard to type. I see what's nice about Tokamak for the DAO Treasury is impermanent loss protection also. $200,000 is a relatively small amount of Fox for a DAO to deposit. I mean, I guess it would be really attractive if we could put several million Fox in there just to have more liquidity in another place. That seems attractive, and I thought I heard the Bancor guy say maybe he could put a proposal up to increase our whitelist, and I just don't know how much room there is to grow that, but it seems like another way to deploy Fox that's just sitting passively right now. So just my thoughts.
My advice is to just make it really big. Yeah. It was kind of interesting to me when we went for 1 million B or 700K B&T co-invest projects in the top 100 were seeking a third of that. But I guess I've just never been shy about asking. So just ask for a lot.
I agree. That makes sense to me, Brian. So just a thought. I didn't know that there was room to grow that as much. If there's 60 or 200 million Fox sitting to be, we put 40 million into Tokamak, maybe more. It seems like a place to deploy a similar amount of liquidity and have it immediately accessible, as where Tokamak's still ramping up. And I'm having trouble tracking how they're ramping up and stuff like that. So, but I understand Bancor easier. It's more straightforward to me.
I just decides on that, so I can write it.
So I'm trying to call out names, but yeah, in many ways, Bancor's been doing that for since they launched that. They've been matching your deposit the whole time, and they just forget to tell the whole world about it.
So I think the thing just for the community to consider, and very happy to consider a governance proposal on this, and the amount of Fox we're talking about is probably fine. But when we're comparing it to the token reactor, the big difference is the token reactor, we currently earn 20% plus in toke on whatever is deposited in there, as well as any community member. I'm not hearing that that's the case here. You get the match in the impermanent loss protection, but we're not necessarily earning anything above fees, unless I'm misunderstanding.
You accrue fees as well. Tokamak, what it really does is direct liquidity to liquidity sources or decentralized exchanges in most cases. So they get the fees from those protocols. In this case, from Bancor, you get the fees directly from any swaps that happen with us or any arbitrage that comes from volume from other exchanges. So you're still getting the swap fees plus the rewards on top and the impermanent loss protection, plus the fact that you can also single site stake.
Gotcha. Yeah, I think we're on the same page. Appreciate the thoughts on this.
Yeah, thanks for presenting that. I think good next steps would be just that initial proposal, the draft proposal, the community to look at, but it could be a good fit.
Sounds great. Thank you.
Cool. Thank you. Appreciate it. Awesome. So this is a nice. This dovetails nicely into our next item, which is Ichi. We have Grace. We already have Brian here. I believe Grace had some thoughts as well on. Let's bring you up, Grace. Welcome back.
Yeah. Hey, Kent. I met you IRL at Eric's house.
Yeah, it was great hanging out. Good to meet you in person.
Yeah, I also got super sick at ETH Denver.
Oh man, are you recovered?
I'm recovered now. Same kind of thing. My throat is still a little messed up, but yeah, I was had a horrible fever and everything, but tested negative for COVID also.
Yeah, some people got COVID and then they were calling it Buffacron. It's a new strain, but yeah, it was great. Thanks for joining us at the dinner and hanging out at ETH Denver. Yeah, it's been fun. It was as always, it's good to meet partners in real life and connect. I think this conversation today is just a testament to us doing more work or potentially more work with you guys. So yeah, what's going on?
Yeah, I think the biggest piece here, and Willie can probably speak more on maybe what you guys talked about in the last meeting, but really what I want to get out to the community is that we do have an angel vault for the ShapeShift community, but it's not as strong as it could be, and we just want to try to make that what we're calling like the buy wall, right, in Uniswap v3 as strong as possible to protect against market downturns. And there was a discussion about adding more rewards, but it looks like Brian came on stage, so I'll let him discuss it.
And to clarify, so what you guys are talking about is basically, okay, yes, we have this existing Angel Vault. This has been up and running for multiple weeks now. I think it's too early to assess whether or not that buy wall has really led to maybe outperformance in a downward market. The jury's still out, but I think in terms of its core functioning, it's working well. But what you guys are positing or proposing is that you're saying that the current amount in the Angel Vault perhaps is not sufficient to provide a meaningful buy wall.
Hey, so let me shed some stats, light on that with stats from our first 2-3 months of operating these. When Ichi started there, sorry, I have Siri trying to interrupt me. When Ichi started theirs, it was about 10% of market cap. So Ichi's market cap was 20 million at the time, and the wall was $2 million. And in the case of ShapeShift, that was more like 2 to 3%, not 10%. So in Ichi's case, the liquidity could be concentrated close to the price. When you do that, it's more likely it basically changes the correlation coefficient with ETH when the price of ETH is dropping in dollars, because it's able to purchase the Ichi from the other ETH pools that you may have on other exchanges at a much higher rate. So like the first bar of resistance at that time for Ichi's pool was around $300,000 versus $30,000 for Fox. Now, the reason Foxes can't be concentrated is if we did that, too much of the vault would likely convert from dollars to Fox tokens, rendering it no longer as useful. So the thing is, what we've learned is that when it's like Foxes, it is still helpful. The $1.9 million there effectively raises the price floor token by $1.9 million. it's definitely changed the correlation coefficient on down markets because it has bought Fox tokens, but it can't buy enough of them is the bottom line, because if you did, concentrate it to that extent, too much of the vault would convert. So what happens when you make the vault larger and you can concentrate it? There's a lot of good benefit. One, confidence in the Fox token rises. In the Ichi community, they actually called it feeling comfy during crypto winter, and their behaviors noticeably changed around selling and buying. And now, whenever there's a market crash, they almost celebrate it like it's the proof that they were so smart by Ichi. So that's the first thing. You can actually change the confidence in your asset. The second thing is that the internal rate of return goes way up, because your main risk of loss is if the price is dropping. If it's no longer dropping, you're going to earn the high fees from the concentrated liquidity. And if the price turns around, you also earn trading gains. So the internal rate of return on Ichi's vault has been 90% since launch. And when we published that to the UI, the amount deposited in the vault grew from $2 million to $22 million, right, in about a month. And the other factor, which is what we're talking about here, was that in that same time, we created the lending pool, enabling people to borrow dollars against their Ichi, then supply the dollars to the vault, basically protecting the Ichi that they had supplied to the lending market, protecting its price. So I do think that following that same recipe, beginning with the rewards on the lending pool, makes sense. But then to also think creatively about how to find more ways to increase the size, further concentrate it, and then yes, you do no longer have to worry about a bear market.
So in terms of specific recommendations you would give based on everything you guys just said, you mentioned that currently the amount of Fox in there, the amount we have in the one vault is not enough. It's not sufficient to maybe withstand a lot of sell pressure. With respect to specific recommendations, like what quantity would you be of one Fox would need to be like minted and added, or like what numbers are we talking about that you think would make it a more robust vault that is more able to actually do that function, just like the Ichi vault is?
Yeah. So the Ichi, the first bar of liquidity, by the way, our market caps are almost the same. The first bar of liquidity in Ichi's vault is now $1.7 million. In your vault, it is about $30,000 or $40,000. And Ichi got in that growth cycle because we made the initial investment at 10%. I think it's possible to do the same thing at 5% of market cap. It seems like it could be, but the bigger the better, right? Because if the wall appears weak, what happens is people see it as exit liquidity. They're not confident it can actually protect the price. They're just like, I'll get it out while I can. If like in the case of Ichi, at this point, you have to sell 20 to 30% of circulating Ichi to get through it. They just realize that selling is futile, and they just give up selling. They just stop doing it. So that's what we've noticed. It's actually, literally people who sold Ichi weekly for 52 straight weeks, like all year long, quit selling, right? And it's just fascinating. So I guess what I'm saying is you want to make it impressive, or whatever that means to you guys. Is what I shoot for, and now I just try to make it bigger and bigger all the time. Like, if they could get it bigger than Ichi's entire market cap, that would be fantastic. So we've gotten a little obsessed. In your case, if you want to try to budget or play it safer or whatever, at least getting to 5% means that the liquidity would no longer go from 5 cents to 25 cents. You could go to like say 10 cents to 25 cents. And if you got to 7, 8, 9%, 10%, you could place that liquidity between 20 and 25 cents, right? And that just makes those bars of resistance that much taller. Make sense?
Yeah, I see the logic here. So doing some quick math, 5% of our current market cap, not the DAO's current value, of course, because that includes other DeFi positions. But if you say our current market cap is 70 million, that's about 3.5 million, which would be, considering we already have what we already have in there, that would be roughly almost double that. I think that I
think it's $1.9 million now.
Yeah.
And so what I think is if you add it to the lending and you provide the rewards discussed, you're going to hit the 5% number just on that, because the people who have the Vault token now will supply it to the lending pool, borrow against it, and add more, right? It's only logical for them to do so. So that's the easy step to get to 5+%.
To clarify for the benefit of the community here, when you're saying add to the lending pool, specifically adding what to the lending pool?
The LP token, and we have an Oracle contract written that can enable you to do that. So basically, the Angel Vault LP token itself, you put it in the Fuse pool, and you provide rewards for people to supply it. So they then take their liquidity pool token, they put it in their Rari pool, and borrow against their Angel Vault position. Now, what do they borrow? If you also add one Fox to the pool, and they borrow the one Fox, you're going to get a double benefit, because now the one Fox, there's more of that circulating, and it can then deposit more to the Angel Vault, and so it just becomes mutually self-reinforcing. Like people who want just yield on stable coins will supply the one Fox. People who are bullish on Fox will supply Fox tokens, borrow the one Fox, and build the wall higher, right? And you just open up a whole ton of use cases for people and their different opinions on how things will play out. And that's what caused our vault to just skyrocket from $2-3 million to 20 million plus.
Right. So I guess the main thing I think that the community, and I want to, of course, open this up to more discussion, but the thing that strikes me here is like the thing that the community needs to consider is this is a novel mechanism for perhaps providing price support to an asset, but it does come at there's two associated costs. There's like the opportunity cost of the assets that we would need to be moving in there, and especially anything that we had to pull from our stable stack is a significant sort of risk factor. That's kind of the number one thing. And then, of course, there's the increased, I would say like a marginal increased smart contract risk. Obviously, we've been using Ichi. Ichi seems reliable, but anytime you're locking up an increased amount of assets, especially a considerable portion of a market cap of an asset, then you're looking at some risk there. Let's maybe open it up. I see Willie.
What's your opportunity cost of stable coins?
Well, the number one thing, if we're this is a very important thing. The opportunity cost, the fewer stables we have, the less positioned we are for a bear market. Stable coins right now are absolutely sacred, I would say, in our treasury. Not literally, we're okay with spending them. We're spending them on payroll. But one of the number one threats to the DAO right now is that we are insufficiently our treasury does not have sufficient stable coins to weather a bear market. So anytime we're spending those stable coins, it needs to be a very carefully deliberated decision, because that means we have that much less for a protracted bear market.
Okay, I thought that you would provide like a return that you got on them. The return in our Angel Vault has been 90%.
Okay, but this also raises
one more point. That return, the thing about it is, if there are enough stable coins to produce, right, and then that
Sorry,
actually
Brian, you're
makes the
cutting out a
project
little bit.
de-risk. Yeah, it like there's two thoughts, and I run into this a lot. We have a little bit of stable coins, so we have to hold on to a lot. But they also usually have a huge treasury that, if it declines in value, puts the whole project at risk. And you can't protect the dollar price of an asset with anything but dollars. So and this is learned in the regular financial markets every day. Like, people, when they're taking companies public, they always build an, because it's just wise. It's part of a responsible IPO. In this space, that functionality had not existed in Angel Vault. And so while the contracts are 3 months old, and again, that's maybe even old in DeFi now, the financial concepts are hundreds of years old. And the bottom line is, the value of your treasury is the Fox token. If you let it go down in price, the whole project is at risk.
Exactly, and I mean, I think we're kind of talking at the same point here. The important, I think, distinction here, and this is kind of my own personal opinion, but you mentioned using our stack of stables to generate return. I personally am very uncomfortable with using, until we meet our goal for having a bear market fund, which is currently 10 million. I'm very uncomfortable with using those stable coins in any other context to generate revenue, for the simple fact that there is a non-zero possibility that something could happen to those, because these are intended to be very, this is a rainy day fund, and it is sort of sacrosanct. That's kind of the general thought there. We have I see Ocean up here. We have Willie, John. What are you guys thinking?
Yeah, I can definitely see both sides in terms of like the DAO depositing one Fox into the Angel Vault. I think there's pros and cons, and I definitely hear where Brian's coming, that it can be a really good source of yield for the stable coins that we have in our treasury, which, to be fair, a lot of them, we have some of them deployed earning yield, but a lot of them are just sitting idly, like over 2.5 million just sitting idly that we could put to work. But I also totally hear where you're coming from, Kent, that those stable coins aren't necessarily there just to generate yield, but also to sustain the DAO, to be able to build through a potential bear market. So we specifically want to take on lower risk strategies with those stables, even if it means giving up some opportunity cost for yield. So I see both sides of it. But I think one thing to clarify would be there's some confusion in the DAO stage around where the source of this yield comes from if the DAO were to deposit one Fox. And so I think, Brian, you could help clarify that it wouldn't just be Fox rewards that would be paying ourselves, but can you talk about the IRR that the Angel Vault see? Yeah, just from the deposit.
Let's also be clear on the risk. So let's group risk into principal protected and at risk to trading impermanent loss, right? Which is, so if you supply the stable coins you have to your rare pool as proposed, there is not impermanent loss risk. That you should get back the stable coins you have plus interest. Right, so that's what's being proposed. If you supply them there, somebody else who has Fox tokens would supply their Fox tokens to the pool, borrow them, and perhaps deposit them to the vault. That person who does that would have impermanent loss risk, right? So I wasn't suggesting that your treasury, your runway get used up with something that has impermanent loss risk, but that you would just enable your community to take that risk in exchange for yield.
Cool.
Does that make sense?
Yeah, thanks for clarifying that.
Yeah.
I want to, so I don't want to spend too much on this discussion. We have 2 other bullet points, but I think, Ocean, you had some thoughts as well?
Yeah, I think the main concern with this, this proposal in general is just like the fragility of the system that we're introducing, right? And I mean, I think crypto markets and financial markets in general, there's this kind of long tail risk that exists that we always think it's going to be fine, but this really opens up a really bad scenario in the case that we do pierce through some of that initial liquidity, right? Because you just have this cascading liquidations that occur, and you're basically just like have leveraged long buying of Fox to support the price. And I don't think that's really like a very sustainable model, especially when we go through like a big macro event or like a 30 or 40% sell off that could occur across a week.
Who's buying Fox?
The Angel Vault, no?
But who put the money in there?
Participants in the Angel Vault? I'm not sure I understand the question.
So yeah, exactly. So we're not talking about the Treasury putting the money in there, right? Those people put the money in all the other liquidity pools as well, right? Like they'll put money into Uniswap V2. And if the price drops, they'll find themselves owning a lot of Fox tokens. The only difference here is that they're not selling Fox tokens. Like they're always selling Fox tokens when they put money in other areas, and that hurts the price of. In this case, they're only putting if the price drops, but that's no different than any other liquidity provision. It seems like we went really back to the basics, and all we were trying to talk to you about was whether to provide Fox rewards to deposit these assets.
Don't we already have Fox rewards on the vault? So this was going to be my question, Brian, is what are the specific suggestions of how to increase the liquidity? Because I just checked, and as far as I can tell, there's already Fox rewards on the vault with an APR over 100%, which seems like that should be attractive enough on one Fox to get a lot more liquidity. It just hasn't happened yet.
Yeah, I think right now.
Yeah, the went down once we put it in the lending. The return is able to do more. Doing more of it takes the reward rates down. So again, I was just trying to share what. Honestly, I'm a little stumped because it seems like a no-brainer.
Sorry, Brian, you're breaking up a lot. It's not.
Yeah,
anyone is debating that having more in the Angel Vault could potentially be beneficial. I think I'm certainly on board with that. I think the question is just the how. Like, what specifically should the DAO or the community do to do this? So I feel like we're already incentivizing the deposit itself with a pretty high APR. We should also consider adding some rewards to the Fox and Friends pool. We were discussing that in TMDC right before this meeting, and I think I would be for that as well. And the idea of like adding one Fox Angel liquidity, all those things make sense to me. But like, is there anything else we should do other than that? I'm trying to figure out what the specific suggestion is.
Yeah, it sounded like maybe Brian was asking if we had considered depositing from the Treasury, but then I heard that wasn't the discussion point. So I'm also curious if there are any other suggestions for how to increase Angel Vault liquidity. But I did hear Brian mentioning the strategy of adding rewards to the Rari pool, and that seems like a really good next step to me. Also, we have a great relationship with Faye and Rari, so the added benefit is that it'll help us develop that relationship. The one tweak that we had discussed both with the EG team and with the TMDC earlier to the strategy that Brian was talking about earlier is I really like the idea of adding rewards both to on our Rari pool, both to the Angel Vault LP as well as to the to USDC. So we are planning to add one Fox still to the Rari pool that's already been approved by the TMDC. But instead of incentivizing one Fox deposits, we think it could make more sense to incentivize USDC deposits. And the main reason there is to promote that ARB so that rather than just borrowing one Fox, people will then be encouraged to borrow USDC and either trade it for one Fox or mint one Fox. But if they trade it for one Fox, then that enables a DAO to then mint one Fox and trade one Fox for USDC. at a favorable rate where it's actually profitable for the DAO. We're getting more USDC than one Fox on these trades, and basically enabling us to diversify the Treasury with zero sell pressure for Fox in a way that's actually profitable for the Treasury. So we talked about that at TMDC earlier, and I like that strategy a lot. It seemed like there was some good support for that strategy. And I think the next steps is we just need to figure out the specifics around how much Fox to reward and over what period. The TMDC, we had discussed 1 to 1.5 million Fox over 4.5 to 6 months, basically the similar timeline for the current reward program for the Angel Vault LP. Great.
I feel
So
like
Brian,
that
go ahead,
is
Ken. I was
something
just
that
going to ask Brian if they had any feedback on those specifics for the strategy or any other alternative ideas.
Yeah, I think that's wise. One thing too, and just another reason to have those assets in Rory is we talked to the Fay team earlier today, and they're getting close on their turbo release, which could even enable more stable coins to be borrowed within your pool. So sometimes there's a tendency to focus on these like 1%, 0.5% risk, when the massive risk here is continued bear market conditions that put your entire treasury at risk. And I just love this project and don't want to see that happen. So I just highly recommend that again, we have a lot of projects launching these. I don't really need it. I just like your project. I think you should protect your price.
Yeah, I totally get that and appreciate that, Brian, and you pushing on us. So we've definitely, I mean, that's why we deployed the Angel Vault in the first place. The question is just to what degree and how do we grow this? So I think what Willie said in terms of the Rari pool, all of that makes sense and is something TMDC is now actively considering, and hopefully we could get up relatively soon, and maybe that could help start an interesting flywheel. I mean, two other strategies that I could see being suggested. Eric posted one of these in the forum. One is that the DAO itself takes some portion of its USDC and turns it into one Fox and deposits in the Angel Vault. That is certainly potential. I mean, another thing we could do, this would be far riskier, but once that Rari pool is up, the DAO itself could deposit into the pool and then, or even take some of its Fox and basically take a loan and use that loan to deposit into the one Fox pool. So, I mean, then we end up with the DAO basically leveraging long into that pool. But all of those are possibilities. I'm not sure if I would necessarily support that in large amounts today, but I think a good step is to get the Rari pool going so that we can get rewards going there. We can get more USDC capital. We can get the one Fox LP earning additional rewards in the pool. Those things would seem to help. And then we could consider if the Treasury itself should participate or not.
One more option, I'm working with venture funds to help put money in Angel Vaults, and Ichi itself is considering doing the same. But I really can't bring those options out unless the result is actually a concentrated strong, right? So if you guys get halfway there, maybe we can help make up the other half. But the weak ones just aren't compelling for those investment cases because the risk is too high that you suffer impermanent loss.
Cool. That makes sense and is definitely worth considering. We'd love to continue those conversations, Brian, and see what it is. I think one way or another, we definitely agree on increasing the one Fox in that pool. It's just, again, a question of how and how much and how quickly can we do this, but I think we're all on the same page in the overall goal.
Cool. I'm going to make some salmon. I'm late. I got people here. It's nice to hang out with all of you.
See you, Brian. Enjoy the salmon.
Thanks, Brian.
Now I want salmon. I think we lost Kent again, too. Cake somehow keeps getting kicked off the stage. All right, I guess it's our show now, John.
All right, let's just leverage long Fox while Kent's up.
Send it. Cool. Seth, are you available to come up and chat about your idea? I'm going to invite you up on stage right now. While he comes up, John, what were you going to say?
No, I was just making stupid jokes. Let's move on to Seth.
Sweet. Seth, you're up. Excited to hear about your, what did Ken call it? Some kind of idea. What was the adjective he used? A cool idea from Seth. I'm excited to hear it.
Oh, okay. As opposed to all my uncool ideas. Great. Yeah. So a couple weeks ago, during the community lunch call, I put forward an idea of having someone visualize the current health of the DAO in terms of, revenues and expenses and so on. And so I've shared the idea with Kent in private, and he really liked it. So I want to sort of flesh it out to the community and see if I can turn this into a bounty or a responsibility, so that basically once a month we can present to the community and particularly to investors about the health of the DAO, and that could be something that benefits the price of Fox without needing to do any, airdrops or, any other manipulations. And I do think this also fits with the ShapeShift value of transparency, right? Because for a lot of people, it's unclear, is our business, what is our business model? And, are we doing better or worse than we were last month, right? It's really unclear. And since this is since we're on a blockchain, everything's public. But the issue is that, to actually get the information in a human readable format, it takes a lot of work. And expecting people to do that work is, I don't think, very effective. Most people aren't going to do it. They're just going to, stick their money in places where they have where they can see more of what's going on. So does that make sense?
I think so. Are you basically saying we need a dashboard that shows the DAO's revenues and expenses each month?
Yeah, and I think this is something that can get fleshed out further and more sophisticated over time. But at the very least, how well are we doing this month is the question that I would like to answer.
I think it's a great question, and I just invited Darwin up on stage because Darwin has actually been working on this dashboard. And to your point, it's not the easiest thing to track because we're pulling. Yes, the data's on chain, but right now we're getting revenues from a variety of different chains. And furthermore, you can't always just see, like, for example, a lot of our revenue comes from token rewards right now. There's not a way to query those token rewards programmatically yet, neither on chain nor via API. So right now we do have a kind of draft. Yeah, I'll just go ahead and I'll let Darwin share it. The current status on this.
Hey, can you hear me?
Yep, we can hear you.
Jim. Yeah, Jim, everyone. Yeah, so I have I kind of continue the board that Woody put together and kind of making the queries more automatically. So I'm going to share a link in the chat with the current spreadsheet. I'm also trying to look for like a different ways to make this, because sometimes just Google Sheet just crashes when I'm pulling this information. I'm using some kind of public APIs to pull prices, transactions on chain, and yeah, that information is feeding the Google Sheet like automatically, but sometimes it just crashes. So I'm also trying to look for like a different way to pull this data. So yeah, that is kind of working in progress, and I'm happy to receive any suggestions. Like said, if you have something in mind, more than happy to work with you on that. That's it.
Okay,
Cool.
Yeah, I'm happy to work with you to.
Yeah, I think I share with you in that channel, like the dashboard channel. I shared the link with you, but I never received any feedback on that. So yeah, but more than happy. I'm also trying to explore the Dune analytics way to pull this data instead of using Google Sheet, but I'm not that familiar with that platform. So that is also something that I'm exploring in my free time. But yeah, I just share with you guys the link for the dashboard. So it is basically pulling prices from CoinCap and for Cosmos and Osmosis, also pulling the information from a few APIs and validating the stablecoin that we are receiving with the data from our wallet. So yeah, but any suggestions are more than welcome. I'm working on this in kind of my free time, but yeah, happy to work with you.
Okay, great.
So I think this is a great idea, Seth. I think you brought this up in the lunch AMA the other week. But what would be nice output of this, and maybe you and Darwin could start this working together, would just be like a basic monthly report of basically revenue into the DAO and expenses out, and just showing what those line items are. So it looks like Darwin already has a pretty good start to this, just looking at his Google Doc. I think there are some other things you should add in there, Darwin, such as the Olympus bonding revenue is a big line item that's missing right now. But it would be nice to just show all the sources into the DAO and all the sources out, and what that net looks like month over month.
Yeah, that is a great idea, and I love it. Yeah, I think for the expenses, yeah, information is also on chain, so that is something that we can pull to and put it's like a P&L for the DAO, basically.
Yeah, more or less.
Yeah, and maybe as we develop it, we could turn it into a a final score, something that even a non-financial savvy person can understand. That would just say, oh, is it better than it was before, or where are we, in totality?
Yeah, I think we just need to start with just the numbers on a monthly basis, and then
Yes,
it'll get really easy to compare month over month. So we can say, revenue is up 5% this month compared to last month, or it's down 5%, or our expenses have ballooned 20%, or those are the kind of comparisons that we need to make and document. That right now, the information is there, but to your point, Seth, which is a good one, it's not easily consumable.
Mm-hmm.
Cool. Well, anything else on this, Seth, that you want to talk about? I think this was a great idea, and thank you for pushing us on it.
I do think. Let's see. Another thing I wanted to add to this is something like the Treasury allocation by token. So I know that the committee for managing the Treasury does occasionally say what we have, but I think having some sort of pie chart with it would also be beneficial. But yeah, that's pretty much it. Also, budget spent by work stream. So a breakdown by work stream might also be beneficial to people. But yeah, for now, that's pretty much it.
Agreed. That would be great. Yeah, I mean, the more granular we can get on that, the better. Alrighty. Well, we don't have Ken here. We're already 15 minutes over. The only last item here looks like it was around VFox, so I can just give a quick update on that. That proposal, after a week in ideation, has moved to Snapshot. It'll be there for a little over a week. Looks like Kent is back, so I'll invite him back up. So anyone who's interested in that, please feel free to go and vote, or if you have still further questions or discussions, you do that either in the forum or in Discord. But otherwise, we're about 15 minutes over. Kent, you're back up here, so I'll hand the ball back over to you. But we still don't hear Kent.